All right, you introduce yourself and I'll introduce myself.
Kia ora. Ko Scott McHardy, Toka Wingoa. I'm the Head of Risk Finance at Toka Tu Ake, EQC. Kia ora ana, talofa lava, maluelele, bulavanaka, to all of those tuning in from other parts of the globe. Warm Pacific greetings from our little part of the South Pacific. It's great to be here. It's great to present, and looking forward to the next session. Cheers.
All right, over to me. We're going to tag team today. Can you hear me? Because I feel like... Oh, you can. Okay, cool. Borada, Sarah-Jayne Dui, Ak, Head of Risk Reduction and Resilience, Dui, in Toka Tu Ake EQC. That's my native tongue, Welsh. And today we're going to talk to you about the importance of having of social and financial resilience and how we do that through our natural hazards insurance scheme here in New Zealand. Particularly reflecting on the ways that we are continuing to grow and move from being a traditional insurance company or entity, i.e. being the response function at the bottom of the hill, and how we're focusing more and more of our time and energy in evolving to being the fence at the top as well. And we're going to start off today with giving you a bit of a brief history about the scheme and the different metamorphoses it's been through over time. And Scott's going to lead that off because he's more ancient than me.
I would say thanks, but I'm lying. Look, it's really important to, as we think about the path, as we think about our path forward, it's actually really important to know your origins and to know where you stand. And New Zealand is a geologically active country. We know this from our recent history, but clearly evidence suggests that we have been significantly more geologically active in the past. And in particular, the period between 1929 and 1942, there were, even though it says 5, there were actually 7 magnitude 7 earthquakes in New Zealand of significant damage causing. The most significant of those was the Napier earthquake in 1931 with 256 deaths. But as well as the kind of financial cost of that, a huge kind of social dislocation from these events at a time where insurance penetration wasn't actually widespread. We also think about the Napier earthquake occurring when it did, right in the middle of the Great Depression. The New Zealand government, we think of debt to GDP ratios now, following things like the GFC and the like. The New Zealand government at the time had a debt to GDP ratio well above 200%. It was not in a position to finance the recovery of Napier, and so Napier recovered slowly, but it also recovered through private finance. So no legislation. The case for change was made, and in 1944, the Earthquake and War Damages Commission was set up. It covered all commercial and all residential buildings. It covered all sorts of things, including bridges and culverts, some of which we also continue to include as part of access ways to people's properties. This was a really kind of forward-thinking piece of legislation in that it was responding to a significant social need, but thinking also about some of the kind of financial consequences of these events and how the government might actually choose to help people intervene. Between 1944 and 1993, we entered a period of a pretty quiet geological space, and I know for the GNS and other scientists in the room, 50 years really isn't time to kind of make those kind of sweeping judgments. But as a social historian, I feel more comfortable doing that. We had really 2 fairly significant events, one in 1968 at Anangahua and the other in 1987 in Edgecombe. One of the things that came clear at Edgecombe was that by far and away the majority of losses were actually in the commercial space. So the Kawerau pulp and paper mill and the Edgecombe dairy factory. And that forced a rethink of how the government thought about the earthquake insurance and natural disaster insurance more generally. And so in 1993, the Earthquake Commission Act was passed, and it focused entirely upon residential building, land and contents. Again, thinking about how it is that the government intervention can help people when they are at their most vulnerable, focusing on the largest single asset that most New Zealanders will actually ever own, and thinking about how do we get people back on their feet. A number of the design features of the Act, which were put in place in 1944, where the Earthquake Commission levy attaches to a fire policy. We talk about design thinking now. That was a really clever piece of design thinking. It's meant that the vast majority of New Zealand homes actually have natural disaster insurance, even though probably the vast majority of New Zealanders don't actually know that. So between 1993 and today, clearly we have had a significant number of events, and the scheme has been tested. Well stress tested, one would say, from the Canterbury earthquake sequence, but also Kaikoura and a number of other events. And again, we think about this from both a social perspective, but also from the financial perspective. The financial steps that were put in place through the scheme has allowed prior to Canterbury for a significant financial buffer to be built up, and we have incurred close to $12 billion of actual loss from Canterbury in an event that's more than 40 billion New Zealand dollars. So again, those kind of financial buffers have been important for the resilience and the ability for Christchurch and New Zealand to respond. It's an event which globally is significant in that close to 80% of all economic losses have been covered by insurance. And that speaks to not only the insurance penetration in the residential market, but also in our commercial market, which we are really pleased with the partnership that we have with the domestic carriers in that it is sponsoring and facilitating high insurance penetration. But that financial resilience also does have a significant impact on building that sort of social resilience as well. So more recently, we've had the Act has been reviewed, we've had a public commission, a public inquiry, and the Natural Hazards Insurance Bill is in its very final stages of going through the New Zealand Parliament. Very much an evolution of the scheme rather than a revolution, which I think points to some of those really well thought out kind of ideas that date back to 44 and through the 93 reforms. The institutional changes will hopefully make it a lot clearer for us. And in the future, one of the key changes will be that we will be changing our name as part of this to Toka Tu Ake, the Natural Hazards Commission, reflecting a very strong commitment to who we are as New Zealanders. Toka Tu Ake meaning the rock from which we stand together strong. And Natural Hazards Commission reflecting the fact that we cover more than earthquakes, which from time to time I reflect to my cousins in Auckland who ask me about this EQC levy and why they're paying it, and I say, well, you have some volcanoes there and we cover you too. So that is a bit of a rapid dive into the history, and I'll pass on to SJ.
So moving on to me a little bit now. Keeping in mind where we've come from a population basis from 1944 to present day, there was about 1.6 million people living in New Zealand then, and now there's about 5 million. So we've continued to grow and we've continued to build, and in doing so, we have developed some legacy planning issues. We've tried to keep up with building and intensifying to meet that population, and in doing so, we've built in some beautiful places, but we have increased our risk. And I think this is where we place ourselves as a point of difference as a scheme and as an organisation, because we're not just being that response, financial response to get people back on their feet. We're also having a social responsibility that we have as part of being a Crown entity. So all of those slides I've just shown you points to the fact that as a result of all of that today, New Zealand's average annual loss from natural hazards is around $1 billion. And we have to address that as a sector, and we have a responsibility as an agency to do so. And we need to be agile to be able to adapt to this. Because when disasters happen, there is many losses, and we need to think about the ways that we can deal with the impact of disasters. We have those direct losses, damage to property, infrastructure, cost of response, the indirect costs, so productivity loss, the things that can be more longer term, medium term and longer term, and then of course those intangible costs that we find hard to put a monetary value on, our well-being. So how do we reduce those disaster losses? Particularly, we have the Crown balance sheet, the National Disaster Fund. Scott's just giving you a little bit of an overview of that, and that relates directly to our financial exposure. The broader economy, that's where some of those more indirect costs are felt, and then of course our well-being. And both of these relate to public good. So Toka Tu Ake EQC are well positioned to be able to look at ways that we can reduce those losses across the entirety of the well-being, public good, and financial exposure for. So this is where we fit into the broader scheme. This is our strategic intentions and our strategic objectives for the scheme and for us as an organisation. So the main thing that I want to point out here is actually the strategic outcome. So what we strive for across recovery, readiness, resilience, and risk financing. So we want to help New Zealanders to recover quicker and faster, hopefully have to recover less. We want to collaborate more, and we do so across the sector, whether that's sharing our research, our data, and our knowledge, or building partnerships for things like public education or readiness and response. We also manage the scheme to make sure that we can get reinsurance so that we have that money when we need to use it. The outcomes that we want to achieve are underpinned by our 4 Rs. Be that leader in natural hazard risk reduction, test, improve scenarios. We discussed this morning. Use those to make sure that we're well equipped to be able to respond. And hopefully these two will come across. And then our 4 Rs. So we look in detail, not the 4 Rs that you think of with CDEM. We have different 4 Rs. Recovery, resilience, risk financing, and readiness. And that's what we build our operational core functions around to ensure financial and community resilience. In doing so, we provide insurance to ensure that we can rebuild after disasters. We manage the fund, secure reinsurance. In order to secure the reinsurance, we have to make sure that we understand our hazards and risks so that we can prove to them that New Zealand, we're onto it. And we do that by investing in the research and the data. So the next slide I'm going to talk to you about is how all of those 4 Rs fit together and why they're important, not just for us as an organisation, but our partners and our stakeholders, and how we work with many of you in the room. So via our research, science and sponsorship program, we build a strong evidence base. Using that evidence base, all of our knowledge, we then have to make sure it gets into the hands of the people that matter, and it's translated in a way that can generate innovation across the sector. So for us internally, that goes straight into working across the different business units, improving how we operate as a business, as a scheme, but also delivery mechanisms externally out to the sector. If we do this effectively, we're going to get better outcomes, and hopefully we're going to improve resilience. And some of the key things you'll see, I'll talk about this later today, is some of the projects and programs that get led from our resilience function at Toka Tu Ake, but also leading into securing the sustained access to the insurance markets and so forth. Today we're going to focus on 2 of those functions. That's going to be the risk financing and also the research, risk reduction and resilience. So to kick that off, I'm going to hand back to Scott.
Thanks, SJ. In terms of risk finance, we think of this through kind of 4 lenses really. The levies we collect, the transfer of the risk to global markets, the build-up of our natural disaster fund, and the role that the Crown balance sheet plays in providing that financial underpinning. Despite the fact that we are a highly exposed country to natural disasters, there is a vibrant insurance industry in New Zealand. It has been built up over a number of years, and as I said earlier from the history, it is something that actually we look at globally and think actually it's, there are clearly issues that we need to address, but for the level of hazard we have in New Zealand, New Zealanders are about the 2nd most insured country in the world, behind the Netherlands. So, it's a testament to the work that has gone on by many of our forebears in terms of understanding those risks, but also the fact that people are prepared to put their capital at risk to support New Zealanders. It is an insurance cover for both building and land. that's a little bit unique globally, but it is about understanding the kind of place from which you stand. The fundamental underpinnings of your home and your property is in fact the land you stand on, and Sarah will talk a little bit to the end in terms of our Te Ao Māori strategy that we are developing, but certainly that connection to land is really important and a unique feature of our scheme. In terms of some of the details, from 1st of October this year, EQC, Toka Tu Ake EQC provides the first loss cover of 300,000 plus GST, and with the private sector then able to provide a top-up cover for the sum insured of the house. It very much is a co-insurance model. It's one that has been developed over a period of time, and one that we think works. Some innovations from the Canterbury and some lessons, some strongly learnt lessons from the Canterbury experience, which are now part of our readiness function, is that one of the key things is that the partnership with our insurers has strengthened substantially over the course of the last couple of years. The insurers now provide the claims handling business for us. They manage all of a person's claims from end to end. And that is very much a part of that kind of evolution of the scheme and how we take lessons from the past to improve the social outcomes for people, but also to improve that ability to kind of get back on your feet quicker. As I said, the risk financing strategy built upon kind of four key foundations: levy adequacy in terms of how much we receive to meet the costs of administration of the scheme, including our risk financing operations. Risk transfer since 1988, when we wrote our first cover in the Lloyd's market for $1 billion New Zealand dollars. There's been an acceptance that not all of the financial risks borne by the scheme can be met domestically, and so over that, my maths is bad on this, 34 years, give or take. There you go.
That's me.
Social historian. Over that period of time, we've built long and deep partnerships with the reinsurance community, and those partnerships have been tested. We have had a very significant stress test in the form of the Canterbury earthquakes, where the reinsurance community, just for Toka Tu Ake EQC alone, has paid us over $4 billion New Zealand dollars to help with that rebuild. Their partnership with private insurers is equally deep, and these are things which we are very proud of. The fact that our reinsurance partners remain committed to the program, and last year we raised $7.2 billion of capacity across 70 plus reinsurers. Now, they don't do this for free. Clearly, we pay them, but part of the work that is critically important is that we've been able to engender a degree of trust, working with our partners at GNS and NIWA and other members of the science community in actually understanding the risks in which we face. New Zealand earthquake model is kind of well tested, and recently has gone through a very significant upgrade in terms of the National Seismic Hazard Model. These are all investments that are critical to maintaining the confidence of people who are prepared to put their money at risk for these rare events that sometimes strike our shaky isles. Improved science, as the slides say, improved science and data. It helps reduce uncertainty. You know, from a reflections perspective, I've described our scheme here in New Zealand, but I think it's important to know that there is no one size fits all, and you know, our scheme has evolved. It is different today than what it was in 1944, and will continue to evolve over time as we understand more about the hazards we face, but also more of how New Zealanders are wanting to live into the future, and how we try and influence that in terms of where people build, how they build, and then how they go about mitigating the risks that are inevitably coming down the pike at us. Just to give a bit of a scale in terms of some of the payouts by comparison to other schemes globally, clearly the Canterbury earthquakes have left us with a slightly off the chart. But again, it's a scheme that has rebounded. We are now at a point where the Natural Disaster Fund is growing again. We're beginning to have conversations with our dear friends at Treasury. I see Steve left the room. Dear friends at Treasury about how we think about investing the fund for future return. And I think it's also about the conversations that we're having with our broader partners. We've always innovated when it comes to thinking about how we finance our risk. And that has been informed a lot by the science. The science and the modelling community has helped us think about the best ways to kind of structure our risk transfer program. And as we set out in our annual report this year, we're beginning to look at other forms of risk capital to provide opportunities for diversification, multi-year duration of cover, and just providing us with that ability to tap into pools of capital that are efficient and meaningful, that provide that kind of financial support and financial resilience for New Zealand for those days and months and years ahead when we will inevitably be tested by another natural disaster. And I think it's worthwhile saying that we're not alone in this, and we do reach out to a range of kind of peers in the global community, our good friends at the California Earthquake Authority and other programs around the globe that think about kind of government risk and how they support their communities. So we do have a significant amount of knowledge sharing with schemes in Norway, in Iceland, in Spain, as well as obviously in the States and other parts of Europe.
And that's also extends to how we make sure that our scheme continues to be equitable for all. This is our draft Te Ao Māori strategy, and one of the key objectives under Article 3 is that we support equality between Māori and other New Zealanders as part of the scheme, but also as part of all of our operations across the business. So I'm going to move a little bit into the research, risk reduction and resilience work program and what we do. So as Scott just said, the fund is increasing. It's no longer in deficit. So we have a social and financial responsibility to protect that. And here's why we care about risk and resilience at Toka Tu Ake EQC. We want to reduce the risk. We have a social responsibility, and we want to secure reinsurance. So we need to make sure that the things that we're doing as part of our ever-growing risk and resilience team are meeting the challenges that we face in New Zealand at the moment, and also doing all of the stuff that Scott's just described, building up the evidence base, using that evidence base, providing reassurance. So I would say that this is our resilience challenge across all of our sector, so what you and your organisations will face, but this is also something that we feel at Toka Tu Ake. And I think we struggle to use the data that we have, and that's something we'll talk about on the panel later today. And we're trying to address that, because what we're seeing is things like this. So this is Snells Beach near Auckland, completely new renovation, but it's been built, despite having a beautiful outlook, within a sea level inundated area, projected, and within a tsunami evacuation zone. So not for Snells Beach, but for another place in the country, we've had exactly the same issue. We've had the council planner contact us and ask us to fund a piece of research so they can prove to their planners within the same council that indeed building an aged care facility in that tsunami inundation zone is a bad idea. So we've got the data, but they want more. So I'm just showing you issues with the resilience challenges and where we've been starting to fit in. Providing evidence for decision makers. Paying out on poor decision making. Paying out insurance and then having to use that data for analytical purposes and to incentivize to stop doing things like this. Constructing a property in a not a very smart area and then paying out insurance. That's not protecting the fund. Same thing here in South Dunedin, constructed in 2016 and paying out a year later. And then if you saw my Lifelines presentation, you'll remember what I said about Petone, the Valley of Disappointment. Despite having 6 different publicly available data sets, Upper Hutt, District Council, they want to intensify Petone. And how have we been involved in this? Got very clear claims data, and we've got very clear liquefaction and earthquake loss modelling, yet it's not being used. Just quickly, how else are we using our data? We're making submissions. So this is all part of how we're going to make change, how we're going to protect the fund. And just very quickly, some of the things that we did on our submission, and I have 2 powerhouses for making submissions from my team in front here. Reduce the risk, please don't increase it. Lessen the hazard exposure, and actually be more responsible with how we're using the data we have. Because one of the things I might question is it's not about having not enough data, and it's not about not making that data freely available or transparent. I'm starting to question whether there's actually trust in the data, and that's not across the science and research community. I think we all do. I think it's outside that chain. So what are we going to do? How are we going to commit to the change, and how are we going to do this together? Evidence-based, risk-informed decisions and choices. And we need to do that in looking at how we manage risk across New Zealand. So we'll all know about avoidance, controlling, transferring, and then just being the ambulance at the bottom of the cliff. And we all have a part to play across the resilience ecosystem. And I'm not going to go into all of the text that's under that because we'll be here for another 45 minutes. But I implore you to have a look at it afterwards. Everyone has a role to play, and there's different parts of the system that are set up to do that, but I would question whether or not everyone's playing their part. So in order to build that evidence base, it starts from the bottom. Use the science, use the data, model it, use it. Risk assessments, loss modelling, goes into the governance of risk and how we communicate. That then helps us make decisions on how we avoid, or if we just have to accept something. So for us at Toka Tu Ake, we fund a lot of the aspects that build that evidence base, and now we're evolving so that we do more of the translation and getting it into the hands of the people that matter. Looking at this a little bit further, what are the problems? Why isn't this working? There's obviously a number of trade-offs with both of these sides. I see them in 2 halves. The stuff here, risk and resilience, reduction, and the stuff over here, which is what we can't really deal with, or we think we can't deal with. There's costs and benefits to both. So here, I might suggest that it's a little bit too hard, but there's benefits. High impact, high cost. So the more we have to use the insurance aspect, the more that we have to respond. But it's sensible that we reduce that, right? Let's protect our costs and put it more into enhancing well-being, using that to fund risk reduction initiatives. So if we look at this together, I would say the one side is totally underutilised across New Zealand at the moment, and we have over-reliance in insurance and response. So I'm not taking away the fact that we have a responsibility to do that, but I'm saying that as an organisation, we actually have a responsibility to do both, and that goes across the sector as well. So what led to this is just taking that slide a little bit further. What do we know about the system, and what can we do differently? So on the left-hand side, I'm just pulling out more of the why if we keep doing that. We're going to see more responses, higher cost of damage, increased impact on well-being. And at the bottom of the slide, I've got national, local, private sector, and public, and I'm questioning what has led to this. And I wouldn't say there is one column or one sector that's responsible. I would say we all have a part to play in things where we've maybe not connected, or we haven't had a connection in how we do things, whether it's the science that leads into the translation, into the policy, whether it's then taking the national to local differing incentives. The reason doesn't matter. It's what we do next. How are we going to make that change? And on the right-hand side, I've got opportunities in local and central government and opportunities for the private sector and public sector. And there's heaps going on at the moment that gives us the opportunity to make the change and all be involved in making that change, whether it's our bill, whether it's insurance retreat, whether it is the CEDAM Act reform, or the Climate Change Adaptation and National Adaptation Plan. And then the private and public opportunities, knowing your own risk, understanding your own risk, and doing something about it, improving how we communicate risk through our natural hazards portal, which you'll hear about more later. So the more we use our science, the more we're going to get bang for our buck across numerous things that we're doing within our own work programs. At Toka Tu Ake, we're going to continue to invest in our science and research, build hazard maps, use our claims data more publicly from June next year. This is really good information that can be used for research purposes. Loss modelling, awesome tool, great opportunities for promoting more risk-informed decision-making for building use and land use. Influencing national policy, making more submissions, and if you're a scientist in the room, I would encourage you to back your science and make submissions when we see silly things that are being proposed, because it's happening more often than not. Doing the same at the local level. And instead of just standing up here and saying all this, we're going to put our money where our mouth is and build some action plans that aren't just for Toka Tu Ake EQC, but they're for the sector to come together. So seeing more resilient buildings built in smart places that are sustainable, they're thinking about climate change and the impacts for the future, and also developing that incentivising resilience action plan is now going to be a risk reduction strategy, specifically for what we will do as an organisation going into the future. Just checking time. I've whizzed through that because I thought I didn't have enough time. Our natural hazards portal. So a lot of you will have heard about this. It's going to be a public-facing natural hazards risk and risk management information site, essentially a public education tool, really. And it's going to go live in hopefully June next year with phase 1. Phase 1 is going to be the first of possibly 7 phases. I say possibly, it definitely will be 7 phases. We just haven't had our board do the stamp of approval yet. And as you can see, the main focus is risk. We know enough about hazards. We don't know enough, the public, we don't know enough about risk. We don't talk about it enough, I would say. So the portal is going to give you the ability to not only learn more about natural hazards using information that many of you generate in the room, but what does that mean for me at the property level, and then what can I do about that? So tangible things that you can do to reduce your risk. Phase 1 is going to be looking specifically at getting our claims data out there into the public. So you'll be able to know what damage was caused to a property, any property, by what event, when that was, and whether or not it was a building or a land claim. This isn't going to be just good for you if you're going to go and purchase a home, or if you already own the home. It's going to be good if you're a researcher or if you are a planner, because you're going to be able to get real data that links directly to damage. So this is a first. We haven't done this before. It's a little bit different to the Canterbury maps because this will be across the country. You'll be able to look across different geospatial viewers, macro and micro level. And it's starting to look really good. And I was hoping I could show you today a little snapshot of what that looks like. But I was told not yet. You have to wait till June. So we're definitely taking it one step further and evolving from what my predecessors did, which is building that really strong evidence base, but taking that evidence base and making it useful and being more transparent about the data that Toka Tu Ake EQC hold that's going to be really useful across the sector. So what's next for us as an organisation as we continue to grow and innovate? Risk transfer, as Scott just said, we're going to start to explore more options to continue to build our own risk transfer model. The portal, we're building a risk tolerance framework. We want to be able to go from looking at things in silos, we want to be able to compare apples and bananas. And that's really important for us for our own risk reduction work program, but also hopefully for the sector as well. And submissions. How many have we done so far this year? Like 65?
Some.
It's where the rubber hits the road. And I think we need to be doing more of it because we're seeing some quick wins. So particularly with Potoni, again, those of you that listened to the Lifelines presentation I did, we've had a little bit of a win. So if we use the data and we get a bit mouthy with it, hopefully we're going to start seeing reduced risk and we're putting less people in harm's way. Risk financing, we're going to continue to make the scheme more affordable. The more affordable it is, then hopefully we'll have more people covered.
We will try.
No, we will.
Global headwinds, we live in a global world, but certainly the goal is to continue to make natural hazards insurance in New Zealand affordable and available for everyone.
Yeah.
And that is clearly supporting the government's goal in that regard.
Yeah. You know me, I'm optimistic. We're going to change the world. Continue to build models. And again, I'll say this today in the closing panel. I want hazard models for all. I want to move from a subjective and qualitative system to I want quantitative data. I want us to base our loss models, our risk assessments all on this. So we're embedding, I guess, trust in what we're doing and what we're using to make those decisions. So yeah, and just quickly, because some of you might care, what's next for the bill? So this is from October through to a 2024 implementation. In about October 2023, we will see probably the stamp of approval for the bill, all being well. And it's usually 12 months after that that we'll have the implementation. So 2023, we will have our new Act, and then in 2024, everything will be signed, sealed, and delivered, and we will have a natural hazards insurance bill act, and the bill will change to an act, and then we will also be known as Toka Tu Ake Natural Hazards Commission. And that's us for today. So thank you for listening. Done. I tried to time it so there wouldn't be question time.
It's the standard select committee process. Speak for the allotted time. That came out wrong.
Good question. Can I just read it out? Unless you want to. I'm taking your job.
No.
That's why he's laughing. You know I'm mouthy. How is your portal going to work with the risk portal that MFE are developing from the NAP, and also in regard to hazards portals regional and district councils have? Good question. First off, we are working very closely with MFE and have been for the past 12 to 18 months because we don't want two portals, we want one. So what's happening at the moment is MFE are going through the process of building a business case for obtaining funds to help support them build the infrastructure for what they want to see. So some of the emissions, data and modelling that they want is obviously different to what we want at Toka Tu Ake EQC. So what's going to happen is whether or not they go forth and build a test portal, or whether or not they put their information on their own website, they will continue to do that. While we do ours, they will merge into the future. And that's kind of another reason for us thinking about the name of the portal, so that it could be a more broader natural hazards site. So you will see that our portal was listed within the NAP, the National Adaptation Plan, and that's because from very early on in our planning stages, we decided to be good public servants and not duplicate efforts and do something together. And I hope that in the future, actually, it's not just Toka Tu Ake, EQC and MFE. I actually hope that it's more agencies. I hope we come together and we have one national site for natural hazards and risk information for all of New Zealand.
Just on that, I mean, when we go to buy houses in New Zealand, you tend to look at the school zones and public transport routes and other bits and pieces. It would be amazing if people were thinking about risk in a way which, saw the natural hazards kind of assessment or the natural hazard risk of a particular property also being taken into account for the same reasons. And I think providing easy access to that information and promoting a risk conversation, I think, is actually critical for us moving this forward.
And we've heard this last week, my weeks are a bit messed up, that the LIMs are going to have more hazard information in them now. It'd be nice to see if it actually tells you what to do about the hazard, because it doesn't at the moment. And if you're buying a house, you have to have 7 different tabs open up on your screen so you can get all of the different hazard information and try and find what to do about it. No more. It's bold. No more with our portal. And the MFE aspect of that is right now, if I'm going to continue on with Whitney's question about how it will work with regional hazard plans, we can see property level hazard information now. We will use that. We're not going to reinvent the wheel, but you'll be able to see that juxtaposed against national data sets as well. So you've got the national flood model versus the modelling that might be done by a regional local council. And you'll be given clear information on the difference about what that information means and what it means to you as a homeowner. That's why as part of the portal we'll have a risk assessment tool and a risk tolerance tool, because you might care that you have a chimney. You might not care. You might want to continue to spend the money that you've saved to refit your bathroom and continue to do that and keep your chimney. So it's all about the trade-offs, but making people make those risk-informed decisions themselves instead of either waiting for the ambulance to come and get you or having a directive from the government. How are you working with MFE, especially with National Policy Statement? Well, in lots of different ways. We've been working even closer with MFE more recently. A member of my team, Wendy Saunders, you will all know her. Also, she presented yesterday. She is working seconded to MFE right now, and she is supporting them across all of their new planning frameworks. So I think through the portal work and through the work that Wendy's doing, particularly through implementation of the NAP and broader, we're becoming more integrated. And I think that's important because if we're talking about dealing with some of these legacy planning issues, we have to be hand in hand with them and in partnership. And Wendy yesterday presented at the Environment Court, and that only came from our relationship that we have with them. And she went and presented on Petone as a case study. Sorry to seem like I'm really hammering Petone, because that's not the case. There are many cases around the country just like that. That opportunity wouldn't have come if we hadn't have been working in partnership with them. And I think that we need to do more of that across central government.
Hello. So have you thought about how you're going to couch this information when you put it in the public? Because
Yes.
I could imagine some people might get quite upset when some of this information is out there, but I assume you're going to need some context around it to say, but, this, that, the other.
Yeah. We've done a lot of thinking on that. And as part of the portal's a whole presentation in itself. We've developed a number of reference groups, and one of those is a social science reference group that are going to particularly deal with a lot of that. And the content that we're developing, a lot of it has to be very straightforward. This is this. But also provide questions and answers for both sides of the coin, because there's going to be people that look at that and think my house price is going to change because you've just said a natural hazard event happened on this site. You can get that information now, and lots of councils already hold that information. So I think it's about how we sell that information on the portal, and we've very much thought about that. We've also done internal risk assessments, if you will, on what are the potential outcomes for people having this information versus that information, and then how we can deal with that through a communications perspective. I think a lot of it is going to be front-footing it before we go live with the portal, even making really, really clear commentary on our submissions, which is another reason why I put it up there today, so it doesn't come as a shock, showing that we're using our previous claims data and why it's useful. And then on the other side of things, and whether or not you think you believe in this or not, I've just recently bought a house a couple of years ago, and I was handed a limb and I was handed a building inspector's report. And in time, hopefully, we can get the real estate agents on board, and they hand you the claims data or they show you the portal. So it's just the transparency of the information, because it doesn't mean that the house is necessarily worse off. House prices in Canterbury continue to soar after the earthquake. So it's, yeah. Hopefully that answers your question. Do you want to take the next one?
I'm from Auckland Council. The things have in the slides, thank you. I'm not from planning, just say that now. But I mean, Auckland Council is a really large organisation. We have a huge number of people working in different departments, all working on things which can contribute to natural hazard risk that we're putting the council in the way of, or putting the public in the way of, or in terms of how we're managing our assets, etc. So there's a huge number of people who are interested in natural hazards and interested in hazard data and using information that you are probably putting together. But it's quite difficult for us as an organisation to keep up with what all the different areas of government are doing and the research they're doing in this space. And I just wondered if that is kind of being looked at. So I know there's the Work with MFI, your portal, you know, whether there's some kind of combined way of kind of helping us as organisations in terms of keeping on top of what all the different government entities and organisations are doing in the natural hazard and climate change space, just to try and help us keep up to date, basically.
Yeah, I mean, it's a good question, and you've just reflected on the work that MFE are doing. That is to try and do just that, have a pathway that's more clearer when it comes to science and research, and that includes what might happen post-response. That's one of the challenges, and when I put up the slide about what part of the system, we're still doing a lot of double-handing, we're still doing a lot of miscommunication. But the more that we can continue to be, I think, transparent with what we're doing by having greater partnership on national platforms that talk about hazard and risk, will hopefully address some of that. But there is initiatives that are going on at the local level as well that are trying to increase that engagement and that gap that is often between national and local. I mean, I think one of the problems is that what's expected and what's asked of at the national level is sometimes not achievable at the local level. So then you see things like Petone happening because they're trying to address what's being asked for without using the science and the research. So that's a bit off topic, but more work to be done, but it's being thought about across the sector. Nick?
So you've mentioned a lot about trying to incentivise future risk, but a lot of the risk we face over the next few years is already locked in. And so what levers or incentives does Toka Tu Ake have to actually encourage risk reduction at the homeowner level in terms of retrofitting and minimising that?
So I think there's the tangible and the non-tangible. The non-tangible is what we will do, not just through the portal, but through Hamish's public education program. So having the thought leadership and advocating to improve resilience and how to reduce risk at the homeowner level, but also at the community level. Some of the things we are thinking about, and it's one of our strategic resilience initiatives over the next 5 years, is developing a risk reduction fund. So that would be where people could make an application to the fund, and a grant would be paid out for them to do something listed within that fund to their home. So whether it would be chimney removal, strengthening foundations, building a retaining wall, that has social and economic ramifications. So we need to really think that through carefully, and it is a policy decision. We don't know yet if we can do that within the fund, or if we can do that within our own appropriations, or if we have to actually do a separate business case to be able to do that. So right now it's a vision, and it's something that we'd like to see. But hopefully in time that will be something that will be available through the portal.
I think the other thing, Nick, is that through the work that we've been doing with the insurance industry more generally, and the work particularly in relation to the new claims response models, those kind of relationships are building and fostering a really useful kind of cross-industry or pan-industry set of views on how we might look to respond and influence behaviours. Now, there's nothing particularly concrete in that space, but we all face the same challenges. These are our customers. These are us, the people that we're serving sit in this room, and again, we're looking to play our part as part of that broader insurance industry to to help make insurance remain one of those kind of cornerstones that we rely upon. Now, we called it overutilisation, and I totally agree with that. But it is about balancing it. It's not ditching one in favour of the other. It's how does the work we do to make homes more resilient then influence obviously the feedback loop for then making insurance remain affordable and available in locations which we know have risk.
100%.
Last one, I think, and this is a big lever. I'm not talking about insurance retreat, but how do you move from advocacy to having a stick and saying, sorry, we are no longer going to cover future construction in this space?
You can answer that one.
Yeah, and I ask this every time, SJ, so...
Yeah, and I think I always say to you, I'd love to be the one that gives a stick, but I can't see that being something that is handed to us as a right to be able to do. And maybe through the work on managed retreat that's being done, there will be more of a government stick. When it comes to thinking about insurance, that's for you to think about.
Yeah, our policy attaches when a private insurer writes cover. We do offer the opportunity for people to come directly to us through Section 22 of the current Act. We have 11 properties that we insure directly for effectively for the cover that's provided under the Act. But that's 11 out of a property count of about 1.8 million. So it's very much a government, central, local, and pan industry issue, and definitely a discussion that is live as we think about the impacts of climate change.
Yeah, I mean, there's things that you can do in that respect, right? You might be able to have higher premiums for the land that's most at risk, but that has to be well thought out. I'm going to leave so there's no more questions.
I'd just like to say, on behalf of SJ and I, thank you very much for the opportunity to speak here today. I think you can probably hear from both of us the passion that we have for the respective areas that we work in. We were reflecting on this earlier as we were sitting up and just before we stood up here and about how proud it is that we work for an organisation that has such a direct impact on the lives of everybody living in New Zealand, and from a public service perspective, that's not always the case. But I hope that came through in our presentations, and thank you very much for the opportunity to speak to you today. Cheers.
Nice.
Thank you, SJ.